Let's bring in Brian Reynolds. He's Chief Market Strategist with Reynolds Strategy. And joining me here on set is Chad Morganlander, Senior Portfolio Manager with Washington Crossing Advisors. Welcome to both of you. Brian, we just had a 4-week T-bill auction go off at 5.84%. That was just about an hour or two ago.
And last week, that same auction was 200 basis points lower.
Last week?
We've had a flight to last week, the 4-week bill was 200 basis points lower than it is today because one matured in May and the other matured in June. And there's been a flight to quality this week within the Treasury bill market, which should be the safest market around, but it's not because of this debt ceiling issue.
And one of the points that you've made is that we kind of need to get to June 15th. Then a rush of corporate tax revenue hits. That might buy us a couple more months' time. September 15, I think we face a similar scenario. But it's going to be dicey for the next, what do we call it, 27 days. How much money do you think, how much time do they really have left? Do you think we're going to hit the ceiling before June 1?
No, I don't. The Treasury Secretary on Monday made her announcement, and all she's ever talked about is the earliest day that there could be a debt ceiling. And what she did in January, when we would have hit the debt ceiling on January 19th, she's been taking extraordinary measures granted to her by Congress to push the debt ceiling out. She's only talked about the earliest it could be breached. In January, she said it would be early June at the earliest. What she said this week would be June 1 at the earliest. She pulled it in by about 10 days. Just a small amount, and that set off a wave of rising rates in Treasury bills in June and falling rates on Treasury bills in May. It was a pure flight to quality. It was an overreaction. If we can get to June 15th, we push this out.
Yeah.
And I don't think she wants that. That's why she pulled it in. I think she wants to bring everyone to the table to get a quick resolution.
Interesting.
Otherwise, it will be a repeat of 2011, and we will have a stock price decline. And that's the thing that will get Congress to compromise.
I feel better, Chad. I mean, listen, there's no one better than Brian on this stuff. If he says maybe we're not going to hit it and we could wait a couple months, then I don't know, could we rally, or is the bank crisis and recessionary concerns going to overcome that?
So we have a cornucopia of issues here. Like Sheila Bair said, you have the financial issues as well as the debt ceiling. Yes, there could be a softening within the overall markets. We do anticipate that to occur. With that said, we would be advising investors to move up the quality spectrum, not only within the equity markets, but also the fixed income markets.
Sure. And let's talk about this and dwell on it for just a second. The heart of the issue right now, and the kind of what brings this whole discussion together, are yields that you can get on various types of things. T-bills right now, Brian, I think the 6-month is still yielding more than 5%. Chad, if you look at 1-year CDs, a lot of them you can still get around 5%.
Right.
You know, on high yield savings, you can get upwards of 4.5%. That makes for a very, unfortunately, difficult environment. I mean, maybe a good one for people who at least feel like they have someplace to put their money for a few months.
Well, there's an alternative. You don't have to be in the highest, riskiest stocks, and you don't have to be in the deep end of the risk pool. So now this is what the Federal Reserve wanted. They wanted to decelerate credit creation, credit demand. There's going to be a tightening of lending overall, and there's going to be headwinds. You have money supply that's negative and going negative. You have credit creation from the Z1 report from the Federal Reserve showing a deceleration of credit. And now you have, of course, what Brian's mentioning, which is this headline risk. We don't think, though, there's going to be default within the U.S. government, but overall it could create some major choppy waters.